Is he? Where's Rick? Where's Rick?
Rick is there.
Yes, he is.
I am here.
Oh, there you go. That's Rick. Hey, Rick. How are you?
Good. I'm good. How are you guys doing? Long time no see.
I know. So we have multiple states here for the team. So we got, of course, Las Vegas. We have California is on. We have Arizona. We have Washington. We have Texas. We have Ohio. We have, who else did I miss? Anybody else I miss? I think that's it. No Kentucky today or tonight. All right, we're ready, Rick.
All right. You're all over the place, aren't you?
Yep, that's how it should be.
Yeah, especially in this new world of Zoom we live in, right?
Yep, it's a lot easier.
It is.
So, Rick, this is composed of from licensed, brand new, no, from brand new all the way to licensed 10+ years. So I don't know how you gonna customize that, but the idea is, again, for the team. Good evening. This training from Rick is a 5-part series. That this is gonna be every Tuesday, same time. So for the next 5 Tuesday, this is what we're gonna train. We want to make sure that after this 5-part series of training, you have a great understanding of our main product, which is the FFIUL. Okay, so take it away, Rick.
Yeah, no, we might have to adjust a little bit because you and I will be in Hawaii for a couple of those weeks. So
Oh yeah, that Tuesday.
we'll have to adjust a little bit there. So we'll figure that out.
Oh, okay. Can we not do it by the beach while we drink our? Oh, never mind.
There you go. There you go. We might be able to do that. Well, listen. Thanks for having me. It's always a pleasure. It was really good to see you guys in Vegas last week. I really enjoyed Vegas when it was maybe 50 degrees. I'm usually there in the summertime when it's 118. So it was nice to see you guys in some cooler weather. But listen, for those that don't know me, again, my name is Rick Barrett. I am what we call a regional vice president. That's a fancy word for wholesaler, right? For Transamerica. And I cover what we call the Mountain Northwest Territory, and that is basically Colorado, everything west, except for California. So I don't have California. That's all right. If you're in California, you can stay. You don't have to get off. Well, we're good. we'll have you. All right. I've been doing this for about 5 years. Okay, but before this, I want you guys to know that I was at the home office at WFG back in Atlanta for about 23 years. So I've been doing this a very long time. I know a lot of things about what you guys. In fact, and Don knows this, and we told the group this last week. But part of that was, back when I started in 1996, they used to let us as home office employees go out and try to build a team, right? So I'd go to work every day, 9 to 6. And then Tuesdays, Thursdays, and Saturdays, I was doing exactly what you guys are doing right now, right? I was going to BPMs. I was bringing people in the business, one-on-one appointments, whatever the case is. In 1999, I became an SMD. So 7146W, that is still my code number today, right? And I kind of joked with these guys last week that I have 4 older boys now that they know what I've done in the past, and they're begging me to go back in the field and try to build again. So you never know. We might see you guys on the other side of the business at some point. But look, with that said, I tell you that I had a lot of different positions at the home office back at WFG. I oversaw the licensing department at one point. I oversaw the sales desk. And the last job I had was I oversaw the entire marketing team. So if you've been to convention, right, and you've seen the booths and the signage and the big stage, it was our team that kind of put all that together. And I tell you all that because I want you guys to know that I believe 150% in what it is we do every single day, right? This is not just a job for me. I really want to educate people and, help them understand what it is they're missing out on, what it is we have to offer. That got a whole lot more real for me about a year and a half ago, within a 6 month period, that very thing that we're trying to protect families against, that death, right, landed in my backyard, not once, not twice, but 3 times within a 6 month period. Right, about 18 months ago, I lost my older brother, who's just 2 years older than me, and about 6 months after that, I lost my dad, and then 3 months after that, I lost my stepmom. And here's the sad thing, and a little bit embarrassing, right? Not one of them. I've had my life license for 30 years. Okay, not my brother, not my dad, and not my stepmom. Not one of them had life insurance. I could not convince my own family of the importance of what it is we do every single day. I take it back a little bit. Later on in life, me and my siblings, we got a small $10,000 final expense policy from my dad. Okay, and so you think about a $10,000 final expense policy. His funeral cost $22,000. So guess who ended up paying the difference? We did, right? His kids. And so if you think about, we've all been in that position where we've probably lost a loved one or a family member or a colleague at work or a church member, whatever the case is. It's one thing to go through that process emotionally and spiritually and physically, but when you have to go through that financially for your loved ones, to me, that's simply not fair, right? And so we've got to do maybe a little bit better job of opening our mouths and really explaining to people what it is we do and not be afraid to do so. Okay, so I'm excited to be here. I don't want families to have to go through what my family went through in that 6 month period, right? It's not fun. Okay, so I'm going to share my screen here, Don. We'll see. There we go. Can you guys see that? Just a thumbs up? We good?
Yes.
Okay.
Good.
All right. Look, I am not going to go through this whole thing, but I wanted to share just a couple of things here. So as you can see here, this is from companies like Life Happens, Limra, Loma. These are third-party companies that really help the life insurance company, right? We have all these cool stats because of them, and you'll see this is really old, right? This is almost 4 years. It's over, just about 4 years old, or 3 years old, but it is still really relevant today. Now, that's why I share a couple of things. Let me just read this first paragraph as we get going here. As we begin 2021, again, this is right when COVID started, okay? COVID continues to take an unimaginable toll across America and around the world. The pandemic has heightened people's anxieties around their physical, emotional, and financial health. Let me ask you guys a question. Do you remember when COVID first started? Do you remember what we were all out there panic shopping for? Do you guys remember?
Toilet paper.
Toilet paper, right? For whatever reason, we were all out there trying to get our hands on as much toilet paper as we could. I mean, my wife would literally kick me out of the house every morning, put on my mask, go to Costco, go to Target. For whatever reason, the world was ending because there was not enough toilet paper to go around. Okay, it was kind of funny, right? When we look back at it now. But there were a couple of other things that people were really panic shopping for. Okay, so the next thing on the list was medications. So to give you an idea, me and my wife, we have 2 boys that are type 1 diabetics, right? They cannot survive without insulin. They have to have insulin to live, right? So do you think as parents during that time, we were a little concerned, a little nervous? No, nobody knew where this thing was going. We didn't know how long it was going to last, this COVID, right? And so do you think we were a little nervous that medication, that maybe insulin might run out? Yeah, we were a little concerned, right? So there were a lot of things. And then here's the thing. If you go back to a Forbes article, Forbes magazine, an article back in April of 2021, the next thing that people were panic shopping for was life insurance, right? people finally woke up. It was an eye-opening experience that, hey, man, we don't know where this is going. I might die with this COVID. And they all of a sudden people were trying to protect their families with life insurance. And we can prove that to you, right? If not only if you look at WFG's numbers during 2021 and Transamerica's numbers, we had 40, 50 million Americans that were losing their jobs. But guess what the life insurance industry was? It was up. It was up big time year over year. Okay, so it was a big eye-opening experience. Let me go through this real quick. I'm not going to go through all of it, but look right here. While our industry cannot prevent this human tragedy that's unfolding in our country, I love these two words. I put on my WFG, my SMD hat here for a second, right? We have an opportunity and an obligation to help individuals, households, businesses secure the financial protection they need. Right, here's what I will tell you when I put on my WFG hat. I've been around a long time. If you're new to this business, you are absolutely in the right place at the right. We hear that all the time. Right place, right time. There is not another company that can touch what WFG has to offer. When you talk about the platform that you have, you could be stuck, for example, with a New York Life or some other company where you have to sell their product, right, and nothing else, right? So you think about WFG and the hundreds of different companies that are on your platform. It is an absolutely incredible platform. Don't take it for granted. You guys are in the right place, okay? Let me go through just a couple more stats. Guys, there are 60 million people that are uninsured, another 60 million that are underinsured. That is an average life insurance gap of $200,000 per family. That is people ask me all the time, Rick, is this market saturated? Is it going to run out? Can we still make money in this business? Right? I'm telling you, unfortunately, it's never going to run out. People are always going to need our help. It is a 12 trillion with a T, $12 trillion market opportunity. Okay. Couple other things. I'll skip this. I can send this too if you want to see more of it. Right here. More than half consumers say they haven't purchased life insurance because they don't know how much they need or what type to buy. And then look at this, more than half, this is where I talk about we got to do a better job opening our mouths, right? More than half millennials, 52%, say they haven't purchased life insurance simply because nobody has approached them. They don't know what to do. They're kind of lost, right? They don't know what to buy, how much they need, and nobody's talked to them, okay? And so we've got to do a better job of opening our mouths. And then finally, real quick, I know most of us in this business, and I talked to Don about this last week, but I think most of your team is life licensed only, right? Not a whole lot of securities reps on the team. Okay, thanks, Don. So here's what I will tell you. If you are securities licensed, okay, just look right here. Most people shop for life insurance after a major life event, right? Buying a home, getting married, having a baby. But here's the deal. If you're securities licensed, you are required by FINRA, by the SEC, you are required to go visit your clients at least once a year to make sure things haven't changed, to make sure you're doing the right thing for them. But do you know if you only have a life license, you're not required to do that. There's no law saying you have to go back to your clients once a year. Unfortunately, I see that way too much from just life licensed associates, right? It should still be our obligation to check up on our clients at least once a year. If you don't, somebody else is going to do that. But here's the deal, things change, right? People are having babies, they're buying homes, they're in the need for more life insurance or life insurance in general, okay? So again, I put on my WFG hat, my SMD hat, as I'm talking to my team here. Make sure you guys are following up with your clients at least on an annual basis. You need to be doing that, okay? All right, let's jump into the presentation here. So when we think about Transamerica and WFG, it has been a very powerful partnership for a very, very long time, right? Transamerica was the first company to really join the mission, join the cause way back in the 90s. And we've protected millions and millions of families ever since. Okay, and we are absolutely committed to keep those promises that we have made. Right? If you think about it, if we've been around for the last 110 years, chances are really, really good we're going to be around for the next 50, 75, 100, 110 years when your clients go needing all these incredible benefits that we have to offer. That's a big deal. Look, I've been in your shoes. I've been to kitchen tables, sitting kneecap to kneecap across a family. And when you can look them in the eyes and let them know that you are working with a company that's been around for 110 years, it eases their minds just a little bit, right? It really does, okay? The other thing is, when you think about the ratings that Transamerica has, right? These A+ ratings. Look, we are subject to the oversight of these financial rating companies. We can't just pay these companies under the table and say, hey, give us that A rating you gave us last year, right? It doesn't work that way. If we are not paying our claims on time, if we're doing things unethically, we are not going to get these ratings year in and year out. Okay, so have these, look, I really stress to people, have these couple of things in your back pocket when you're talking to clients, especially when you're using Transamerica, right? Have the history, have the ratings, right? I promise you it's going to ease their minds just a little bit. I'm not going to get into a whole lot of this. I just want you to know that, and I talked to you guys last week about some of the new leadership. I talked to you about Jamie O, Wendy Boyd. Guys, things are changing. All right? And I know I always tell people sometimes I feel like the boy who cried wolf, right? I tell you things are going to change, they're going to change, and they never do. For the first time in a long time, first time maybe ever, I am super excited about where Transamerica is heading, especially when it comes to customer service, when it comes to technology and things like that. Jamie is the president of Individual Solutions. When she says something's going to get done, it's going to happen. Okay, and so you're going to see. I mentioned a lot of good things that are coming last week as far as customer service and the case managers and things like that. You're going to see a lot more than just that. Okay, so some good things are coming because of the new leadership. I'll give you one more example, Rico. You see Andrew Viger here. He's the new head of underwriting. If you go back like a year and a couple of months, back to October of maybe 2022, and you were doing business with Transamerica, it was taking, if you remember, it was taking 14, 15, 20 days sometimes to even get to an underwriter, right? When you submitted a piece of business, okay? Andrew came in around that time and he says, give me 8 weeks and I'll have it caught back up. He did it in 6 weeks, okay? To the point now where if you are submitting a piece of business and everything's in good order, you're usually getting a decision back within a few days, a week. It's definitely, the time has definitely been cut shorter than that 15 days. I mean, you're getting everything through within that time period, okay? You look at some of the numbers when we talk about the why Transamerica. Look, you guys know our upline, when you talk about WFG and Transamerica, our upline is Aegon, right? Aegon is our company. You think about almost 30 million customers worldwide, okay? When you think about just Transamerica here in the US, there's almost 11 million clients or customers, right? Almost 13 million policies in force. The one that's kind of cool every time I see it, look, almost 47 billion has been paid in insurance, retirement, annuity claims. You've got to be a pretty big company to be able to pay this out and still keep ticking, right? So a lot of cool numbers. I shared this with you guys last week. I think this is a big deal. In fact, I forgot, I need to send the actual article to you guys, right? But you look at Forbes, last year, 2023, Forbes ranked Transamerica #1 or the top insurer in reliable policy illustrations. When you go down and sit, you're sitting down with your clients and you're showing them that cash value and what it's going to be, potentially going to be 20, 30 years down the road, right? What Forbes said, this means you're less likely to be taken by surprise by those lower cash values that you expected. And then USA Today, 2023, selected Transamerica as the top choice for life insurance policies, naming them the best company when it comes to living benefits. Okay, not only on the, we'll get into the FFIUL, but also the term LB that we have. Okay, so a lot of good stuff that you need to make sure you're sharing with your clients as you're going out there. Okay, as we talk about the history, again, I'm not going to dive into this in depth, but I think we all know kind of where it started back in, we talk about 1906, started in San Francisco, and that the earthquake hit, started by a guy named A.P. Giannini, right, where he really made banking and financial services available to everyone, not just the wealthy. And the really cool thing about that is nothing's really changed, right? When we talk about Transamerica is one of the best companies out there when it comes to serving that middle class, that everyday average American. There's a lot of companies out there that won't touch you unless you have, $1 million or $2 million of net worth. Transamerica is going to help anybody from a $50 a month mutual fund to a $500 a month IUL, right? So there's a lot of in between where we're going to be able to help just about everybody. Okay. If you go to, I'll stop in 1981, for example. 1981, Transamerica is one of the first companies to introduce universal life, not IUL, but universal life. Okay. And look, I think I'm trying to do the math. I was 10 years old in 1981, right? So I really didn't pay attention to interest rates as a kid. But if you do the history, if you go back and learn about the history, interest rates were really, really high in the 80s. Okay. It was not uncommon to see interest rates like 10, 12, 14% in a universal life product, right? So those were guaranteed interest rates. That was crazy. To kind of put that in perspective, if you had parents or grandparents that owned a home in the 80s, guess what the interest rates were? They were 16, 18, 20%. Imagine owning your home today, wherever you are, with an interest rate of 18 or 20%, right? It would be insane. But that's what they were back in the 80s, okay? 1997, Transamerica, the first company to break new ground on this thing that we call Index Universal Life, okay? That's what we're going to kind of study for the next, we're going to study this for the next 5 weeks or so, okay? We're going to start breaking it down and make sure you guys understand the product inside and out when we get done with it, okay? 1999, Aegon acquires Transamerica. 2001, that's when WFG becomes a member of the family. And then 2015, Western Reserve Life becomes Transamerica Premier. So real quick history lesson. If you go back, when I first started with the company back in 1996, again, it wasn't even WFG, it was WMA back in the day, right? But it was Western Reserve Life, again, later became Transamerica Premier in 2015, but Western Reserve Life was the very first company to join the cause, okay? Let me just, when I think about going back to 1996, I used to sit on these boards, right, at the company that really was responsible for interviewing companies, bringing them on the platform to have you guys sell their products. Can I just tell you, in 1996, in the late 90s, there were not a whole lot of companies looking to join WFG or to back then WMA. Right? They just didn't understand what we were trying to do. You fast forward 5 years ago when I still was at WFG and I still sat on those boards, because companies are knocking down the door trying to get in to have you guys sell their products. Okay? And it's just really cool to think that Western Reserve or Transamerica was the very, very first company to do so. Okay? So we've been there from the beginning and certainly not going anywhere. Okay. All right. So let's talk about this question right here. This why. Okay. We're all out there. Especially you guys are out there. You're meeting with clients. And here's the deal. Every single family in America, right? If you were to really sit them down and interview them, they all have a why of why they need life insurance. Right? They do. Whether it's they want to protect their home, their family, they don't want their kids to have to go to the junior college. They want them to go to a big time college, whatever the case is. The problem is nobody's out there anxiously wanting to buy life insurance. My wife and I we're not waking up every day thinking to ourselves, man, babe, you know what? I heard life insurance rates are really, really good today. Let's go buy some life insurance. Like, nobody's doing that. It is up to us to go out there and talk to them and help them figure out what their why is. Okay. So let me, maybe a couple of you can just take yourselves off mute and help me answer a couple of questions here. You guys are out there doing this every day. You're meeting with a client, right? And you're feeling good. And all of a sudden, they give you an excuse of why they're not going to buy life insurance from you. What are some of the excuses that you guys hear from your clients? What are some of the reasons why they don't buy life insurance?
They can't afford it.
All right, so it's too expensive. They can't afford it. It's too expensive. What else?
They have life insurance at work.
Okay. All right. I'm going to talk about that one. I hear that all the time, right? I already got enough. I got life insurance through work. Anything else? Anything else you guys can think of?
They're not gonna
It's not
die.
their priority.
I'm sorry.
I'm healthy. I'm not gonna die.
Okay. Yeah, I'm healthy. I don't need this. Why do I want to pay for
I don't
something?
need this. Yeah.
I'm never going to use this. Why should I
It's so
pay for something I'm
beneficiary.
never going to use? Right? All right. So there's a lot of excuses out there. Let me go over. By the way, when I come back, we'll maybe get into some of the we'll get some of the objections and how to overcome some of these. Right? I hear the expense one all the time, and I just literally, it's too expensive. And my first question I usually ask is, compared to what? What are you comparing this to? There's really nothing, unless you're comparing this to another IUL, there's really nothing to compare it to. And where's that break off? You know, that break off point of something being too expensive to protect your family, right? That should be the most important thing that we do. All right, but let me talk about the life insurance at work one. So I have a really good friend who lives in Atlanta. I used to live in Atlanta, right? I lived there for 23 years. And my good friend, about 18 months ago, I'll call him Joe, right? He calls me and he says, "Look, Rick, I'm looking to get more life insurance. I want to kind of pick your brain. I don't think I need it because I have some through work," right? And that was all he had. And so that was a whole nother conversation that we had to have, right? Because if you're new and you don't know, like most people that have life insurance through work, if they were to get fired or quit, probably not going to transfer with them, right? They can't take it with them. But I asked him, I asked the question that you would probably ask. I said, "Joe, how much do you have?" And he says, "I have $250,000, again, through work." And I said, "All right, Joe, let's talk about," I said, "That's a great start, right?" I said, "That's a great start, but let's talk about some reasons why you might want to consider a little more." And then I literally went into what you guys would do, like an FNA, right? A financial needs analysis. And I said, "Joe, if something happens to you tomorrow, do you really want your wife to have to work for the next 20, 25 years? Do you want your kids to be able to go to the college of their choice? Do you want to be able to pay off your house and all of your debt?" Right? And I know where he lives, and it's much more than $250,000. Okay. And I started being a little facetious. I started joking around with him. I said, "Joe, let's pretend like you just won the Georgia lottery. You just won $250,000. I said, "Good job. Congratulations. You can now quit your job," right? That's going to be plenty of money for you and your wife to retire on. It's enough for all your health care. Your kids can go to the college of their choice. And, you can pay off your house with that $250,000. And he looked at me and just kind of started laughing. He went, "Wait, are you serious?" And I looked at him, I said, "Joe, if you don't think winning the lottery and winning $250,000 is enough to get you and your family through the rest of your lives, what makes you think $250,000 worth of life insurance is enough, if something happens to you, is enough to get your wife and your kids through the rest of their lives?" And he just kind of had this, he went, "Oh man, I've never thought of it that way before," right? He had this aha moment. And so I tell people, look, as you get going in this business, and you've probably heard this before, you might be new, you might not have your own stories yet, borrow stories. You know, I call that my lottery story. Borrow it. You know, it kind of gets people thinking about what they really need to take care of their families. Okay. The other one, real quick, is you know, I hear all the time, I don't want to pay for something I'm never going to use. Why would I do that? And I tell people, here's what I will tell you. There might be a little truth to that if you're talking about term insurance, right? You know, we have a 30-year term, we get through that 30-year term and it expires. We might not use that term insurance. But here's what I will tell you, even with our term LB, living benefits, you got a pretty good chance of using that. But if you have an FFIUL, if you have a permanent life insurance policy, as long as you're paying those premiums, in one way or another, you're pretty much guaranteed to use that, right? You might be the one that has to pass away for your family to get that death benefit. But if you live and you need that cash value, you know, you can put a down payment on a home. You can supplement your retirement income with that, right? Or we have the living benefits of the long-term care rider that you might need later on. As long as you're paying your premiums, you are guaranteed at some point to use that permanent life insurance policy. And I kind of throw around the story of my auto insurance, kind of compare it to my auto insurance. Guys, look, I have a 25-year-old daughter. I have a 24-year-old son. I have a 22-year-old son. I have a 17-year-old son who just got his license. Okay, do you think I pay a pretty penny with my auto insurance every month based off of that? Yeah, right? Kids are expensive when it comes to auto insurance. I pay over $500 a month for my auto insurance. I pay over $500 a month for something I hope I never have to use, right? But if my 17-year-old son is driving down the road and gets distracted and hits a car, I'm going to be glad I'm paying that. Okay. We are mandated in most states to have auto insurance. We are not mandated to have life insurance. But if we pay those premiums, guys, at some point or another, we are guaranteed to use that life insurance. Okay. So when we talk about this why, it is up to us to help figure out what that why is for each of our clients. We've got to dig that out of them. All right. So I think there are 3 questions. I have 3 questions for you that I think that you can help your clients answer, okay, to help dig this why out of them when we start talking to them, okay? So the first question, so write these down or just memorize them, but these are all very simple questions. And by the way, when I used to do this out in the field, when I used to sit with my clients, guys, I did this 20, 25 years ago, right? And sometimes it's a little awkward, but it helps them start thinking about why they need this, okay? The very first question is very simply this: what happens if I die too soon? So I would literally write this question down, hand it over to my client, and make them answer this out loud. And the question was very simply, what happens if I die too soon? It starts them thinking about, all right, what's going to happen to my wife, my kids, my debt, all that kind of stuff. Okay. Look, we did if you look at the screen here, we did a survey with LIMRA about a year and a half ago, maybe a couple of years ago. Okay. And there was one question that was in this survey that stuck out so profoundly that we wanted to take it out and put it into our presentations. The question was very simply this, okay? How long would it take your family to feel the financial impact if something were to happen to the primary wage earner in your family? Okay, let me repeat that. How long would it take your family to feel the financial impact if something were to happen to the primary wage earner in your family? Okay, so let's just say you got mom and dad's out working, but you got a stay-at-home mom, and let's just say you have 2 or 3 kids, and worst case happen and dad passes away. How long is it going to take mom and those kids to feel the financial impact? And you can see here, 57% of the families surveyed said within a year or less, they have no idea what they're going to be doing, right? Financially, they're going to be done. Means mom's going out, finding a job, maybe 2, maybe even 3 to try to bring in, right, what dad was bringing in since she wasn't working. Okay, guys, we've got to start opening our mouths and start showing them some of these things. Okay, again, we talked about 60 million Americans that are uninsured, another 60 million that are underinsured. Okay, we got to start doing a little better job with this. Oh, by the way, let me just point out this. So we work with a guy by the name of Dr. Joseph Coughlin, right? He is the founder of what he calls the Age Lab at MIT College. He's a brilliant, brilliant guy. He's fun to work with. He's super fun, and he has a lot of fun with the audiences when he's there. But he told us at one conference a couple of years ago, right, that over 40% of the people out there will have a bigger fear of outliving their money than they do of dying. So think about that. My biggest fear is not that I'm going to get hit by a bus and die tomorrow. My biggest fear is I'm not going to have enough money to survive on during my retirement years. Okay, and we're going to talk more about that as we start getting into the indexes. Okay, so the first question: what happens if I die too soon? Second question, very simply, is this: what happens if I live too long? Okay, so we just talked about that, right? That the biggest fear is living too long. He also pointed out, think about this, Dr. Joseph Coughlin, if you have kids or grandkids that were born in 2007, 2008 or beyond, they now have a 50% chance to live past age 100. All right, so think about that. These kids that are born in 2007, 2008, they're going to spend 30, 40 years in the workforce like we are. But then you think about that golden age of when we all want to retire, right? That age 65, that's kind of the number we always throw out there. If these kids retire at age 65, they're going to spend 35, 40 plus years in retirement, okay? And so Dr. Joseph Coughlin, he always looks at you right in the eye and says, what are you doing to help with that? This is much more than just life insurance now. We gotta help people start thinking about their retirement, how they're going to get through that, how they're going to support themselves. Okay. So the second question: what happens if I live too long? Am I ready for that? And then the third question, very simply, is this: what happens if I get sick? And I'm not talking about I get the common cold or the flu. I can take some medicine and I'm back at work in 2 or 3 days. But what happens if I have a heart attack or a stroke or renal failure or or cancer or some type of cognitive impairment, and I literally can't get up and go to work for 6 months or a year? Am I prepared for that? Okay, as you can see here, 70%, 70% of everybody turning age 65 is going to need some type of long-term care service. Guys, the numbers are there. They don't lie. Okay? We've got to stop hoping and praying that we might be one of the lucky ones, the 3 out of 10 that might not need it. Okay? We got to start doing a better job of helping people with this, with these type of issues. The sad thing is only 14% of the people that responded actually own some type of long-term care coverage. The numbers don't add up. Okay, it's up to us to get those numbers up to where they need to be. And here's what I will tell you. I heard this stat a couple of years ago, and it's one of the most alarming stats that I've heard. Listen to this: 42% of all new cancer patients will lose their entire life savings because of the high cost of treatment. Okay? 42% of cancer patients are going to lose their entire life savings because of the high cost of treatment. And if I were to, this is a rhetorical question, you don't need to raise your hand, but if I were to ask you to raise your hand, if you know someone that's been through cancer, whether it's a family member, a neighbor, someone you work with, every single one of us is going to raise our hand. We know someone that's been through that. Okay. And we go back to someone that, when I asked why people don't buy life insurance from you, someone said because they're healthy, right? They don't need it. I'm telling you, when we talk about long-term care, we'll get into long-term care and chronic and critical. We'll get into that in the next couple of weeks. But there's a lot of people that don't add these riders because they're 30 years old. They're so young, they don't need it. They feel like nothing's ever going to happen to them. When in reality, it's the perfect time to add these because the cost is going to be super cheap, right? And when you think about 20 years down the road, when that 30-year-old becomes 50, right, and they're unhealthy, they're not going to be able to add it at that point. Okay, so we want to make sure we're talking about this stuff while they're super healthy, super young. All right, so when we think about those three questions, what happens if I die too soon? What happens if I live too long? And what happens if I get sick? Guys, one of the best answers that we can support you with is what we call the Transamerica Financial Foundation, IUL, right? Or the FFIUL as you guys know it. Just a real quick backstory on this when we talk about the Financial Foundation, IUL. It was your leaders, the leaders at WFG, that came to Transamerica back 2011, 2012, and asked to be a part of bringing this to fruition, right? So it was the Swan Winds of the world, the Jeff Levitans, the Rich Stolleys of the world, who came to Transamerica and asked to help put this together. So it was your leaders that kind of built this product, right? And so that's a pretty cool thing to know that, and they continue to give feedback, right, on where we should go with products going forward. So pretty cool story. So look, this is my compliance slide. As long as you guys know that this is not a security, right? You read here, it's not an investment in the stock market. By the way, one of the very things that we'll talk about, in fact, I think we'll talk about this next time we get together, right? So if your client is giving Transamerica $100 a month in premiums, let's just say $100 to keep it simple, where does that $100 go? If it's not going into the stock market, where's it going, right? We're going to break that down for you, okay? So to make sure you guys understand that, because a lot of times, or most people, most new agents, we think about the indexes like the S&P 500 or the global index that we have available in the FFIUL. Most people think that $100 goes directly in an index, starts working, but it's much more than that. We got to make sure you guys understand that. So we'll talk about that stuff coming up. All right. But as long as you guys understand, it is not a security. It's not invested in the stock market. I can whip right past this compliance slide. All right. So let's talk about this. Let's talk about this financial foundation. Okay. Again, I told you guys I've had my life license for 30 years. When I started selling life insurance 30 years ago with my dad, there was not much to it, right? We would go sell a life insurance policy, and the only thing that we were really selling was that death benefit, right? That's it. We would sell a $500,000 term policy. Someone passed away, they got $500,000. But here's the deal. There's so much more to it than that now, right? Ultimately, the death benefit should always be the reason why we are selling life insurance. That is the number one reason. We want to protect that family. We want to leave a legacy for that family if something happens to that primary wage earner, okay? But it's important to understand nowadays that it is much more than just a death benefit. Okay, so let's talk about that for a second. If you look here, we talk about if they do pass, right? One of the things I don't think we talk enough about is this first little bullet point. It is a federal income tax-free death benefit, right? If I have a $500,000 policy on my life and I pass away, my wife is going to get a check in her hand for how much? For $500,000, right? Not minus 20% because she's in a 20% tax bracket, right? Or not minus 10% because she's not 59 and a half, right? With some of those rules that we have, she's going to get a $500,000 benefit if I have a 500. And so we'll talk more about that in the weeks to come. Okay, we'll talk about this no lapse guarantee, I think, next time. Okay, but if they live, we talked about this. We have these multiple account options, right? Where that money's going to go work for them, tax deferred earnings, and eventually tax-free transfers and cash values that we're going to be able to access through withdrawals and loans that we're going to talk about in the weeks to come. Okay, and then if they do become sick, if they become chronically or critically or terminally ill, we're going to be able to use those funds to support that. All of this we're going to talk about and really get into depth in the weeks to come. We're kind of staying kind of high level tonight. Okay? All right. So if you haven't listened to a word I've said all night, this is where kind of the rubber meets the road. This is where you want to just kind of pay attention. This is where the IUL really starts working. Okay? Look, there are 4 things. I call these 4 pillars. I call these the 4 cornerstones to a strong financial plan. Okay, again, 4 cornerstones. You think about building a house, right? You got to have 4 solid corners to make sure that house is going to be stable, right? These are the 4 cornerstones to a strong financial plan. So if we start kind of right to left, okay, we're going to have safety. We're going to have growth potential. We're going to have tax advantages, and we're going to have protection. So if I were to come to you, Don, or come to you, Edwina, I see you. If I were to come to you and ask you a question, hey, if I could show you a solution in the marketplace today, in the financial marketplace today, that has safety, that has growth, that has tax advantages, and has protection, would you be interested in learning just a little bit more about that product or that solution? Who's going to say no to that, right? They might think you're crazy and say, that doesn't even exist. Where can I get all 4 of those? But guys, nobody's going to say no to that. Again, if I could show you a solution or product that has safety, growth potential, tax advantages, and protection, would you be interested in learning a little bit more about that? That's a solid question to ask people, okay? Because they're not going to say no. All right, so let's let me go jump out of here real quick. Don, do you see the 4 circles here? I just want to make sure it transferred over. Okay. All right, so guys, just to kind of put things into perspective and how I used to do this 25 years ago. Don, you've probably seen some presentation like this, right? We all have. But the reason I want to show you how I do it is how I bring the FFIUL into it, okay? So if I was in front of you today, like we used to be, right? I would come to your office and we'd have a whiteboard and I was doing this presentation in front of you. I would draw 1 circle at a time, okay? So don't jump ahead. Let's start right here. I would draw this circle and I would ask the question, where do most people in America put their money today? Right? In other words, I have a job, I got a part-time job, I get my paycheck. Where do I put that paycheck? Right? Someone would raise their hand in the audience and they would say, well, put it in the bank, right? I say, that's right. So I always label this first circle banks and CDs, okay? And I always follow that question up with this question. Why do most people put their money in the banks? Right? And someone always raises their hand, they say, well, because it's safe. Right? And that's right. So I put the pros right here. I put safety, right? It's liquid. I can go to the bank and get my money out tomorrow if I need to, right? And then I'll ask the question, why should we not put all of our money in the bank, right? And I make a cons list here. And people, there's no growth, right? I don't know what you guys are getting on your Wells Fargo checking account, but it's not much, right? We're not getting a whole lot on that, okay? So there's no growth. It's taxable. The inflation kind of goes along with no growth. But if there's someone new or a client, I might tell a story about inflation to help them understand. I might say something like this. Look, 10 years ago, I go into a grocery store with $100 and I come out with 10 bags of groceries. Today, I go into that same grocery store with that same $100 and I only come out with 2 bags of groceries, right? That's what inflation is. So we kind of talk about that a little bit. And then I'll draw the second circle. And I'll ask the question, where else do people put their money? and someone usually raises their hand and say, look, I got a 401k at work. And I'll say, that's right. Yeah, and we stop and we talk about those. So we'll talk about IRAs and mutual funds and 401ks, stocks and variable annuities, things like that. And I'll label this circle investments. Okay. And I'll ask the same two questions. Why should we put our money in investments? Right. And the obvious answer is that's where we're going to get our growth. Right. In fact, I'll usually stop and say something like this. Most of us are really, really good about going out and working for our money. But very few of us know how to make our money work for us, right? And so we'll talk about investments. That's where we can do that money working for us, okay? And I'll ask the question though, what's the con? Why should we not put all of our money in investments? By the way, all four of these circles are good. We need to diversify, okay? I'm not going to tell you that one's better than the other. They're all necessary. But I'll ask the question, why should we not put all of our money in investments, right? Because with reward, there's always that risk, right? There's that chance of that the market going down. That they're also taxable, things like that. Okay, so we'll talk about that. And then I'll draw the third circle and I'll say, where else do people put their money? And usually I have to just write it up there because most people don't get it. I'll put insurance companies, okay? And I'll ask the question, why should we put our money in insurance with insurance companies? And by the way, this could be auto insurance, home insurance, whatever the case is. But we're talking life insurance right now. And the pros, you look at the pros, right? We got protection, right? The number one thing that we think that we should think about when we talk about life insurance is that protection. Okay. We also have the tax advantage. We'll come back and talk about those in a second. But again, I'll come over here and I'll ask the question, what if I could show you a solution that has all four of those cornerstones? Safety, right? Safety, growth, tax advantages, and protection. Would you be interested in learning a little bit more? And I'll say, well, that actually exists. And I'll draw the fourth circle. And in it, I'll put all product, the FFIUL. It's kind of ugly because I'm doing it with my computer here. But we'll put FFIUL in that fourth circle, okay? And I'll say, look, we are going to get the safety that we get from the banks. We're going to get the growth that we get with the investments. We're going to get the protection and the tax advantages that we get from the life insurance companies. Okay? Now, you guys that have been around a while, you can help me out. Okay? Take yourselves off mute and help me answer these questions. When you think about the FFIUL, what is the safety feature inside the FFIUL?
0.75.
There you go.
Floor.
Right? We have the floor, that guaranteed floor, the 0.75%. The market goes down, your clients are not losing money. Okay? What is the growth feature inside the FFIUL?
That's 12%.
Actually, it's 13%, right?
13%.
Yeah, and it depends, right? 13%, and we'll talk about this next week, okay? But 13% in the global, 12% in the S&P 500, but that's where the growth comes from. By the way, look, I tell people all the time, look, I completely understand that if the market goes up to 20%, I'm capped at 13%, right? Mm-hmm. Guys, I will take that all day long inside of the life insurance product. I'm not talking an investment, right? I'm talking life insurance. I will take 13% all day long, especially if I know on the downside I'm not losing any money, okay? What's the protection inside the IUL, inside the FFIUL? Well, we got the death benefit, right? But I also tell people we have the living benefits. I consider that protection. Okay, all this stuff we're going to talk about in the weeks to come. And then right here, we got the tax advantages. We have that income tax-free death benefit that we just mentioned. We got tax-free withdrawals and loans when we got to start using that money. Tax-deferred growth. And then we also have what we call tax-free exchanges, which means, again, we have different indexes. If you as a client or your clients wanted to go back and forth, like I want to look, I don't want to be in the S&P 500. I want to go to the global index. That's what we taught. We can exchange that tax free. We can do that tax free. Okay. All right. Let me show you one more thing here. And we'll end for tonight. So Don, I'm going to pick on Don. Can you take yourself off me? You're going to help me out here for a second, okay?
Absolutely.
I'm going to pick on you. Whoops, I don't want that. Let me do that. Look, if you are having a hard time explaining to somebody how the FFIUL works, show them this simple little scenario. Because I learned a long time ago that there are basically three types of markets, right? We got markets that go up. We'll have markets that go down. And we'll have markets that kind of go sideways. Okay? So, Don, I'm going to ask you a question. I don't want you to get this wrong. I've done this a lot. I've never had anybody get this wrong. I don't want you to be the first person to get this wrong. All right? So, if you need to phone a friend, you can do that. All right? But if I were to ask you, for the rest of your life, Don, you could get rid of one of these markets. You did not have to participate in one of these markets for the rest of your life. Which one are you going to get rid of?
Of course, the middle one.
All right, good job. Guys, this is simply how an FFIUL works, okay? We are going to participate in everything up to that 13%. We are never going to participate here. And this isn't really even sideways. This is that 0.75%. That's going to at least go up a little bit during those 5 times, okay? All right. Look, we are just about at the top of the hour, Don. I hope this has been a little helpful. I know some of you guys have been around a long time. Some of this is probably old stuff to you, but sometimes a refresher is kind of good. But from here on out, we are simply going to dive deeper and deeper into the product. We'll talk about the indexes next week, how they're credited. We'll talk about some of the costs that are associated with the product. So anyway, Don, I'll turn it back over to, I don't know if there are any questions or I'll just turn it back over to you, and hopefully this has helped a little bit for tonight.
All right, thank you. Thanks a lot, Rick. Yeah, definitely. Because this is our, like I said, platinum provider. Our main product's the IUL, and it's good that we start from from a faraway view of the IUL as a whole, who is Transamerica, how we're offering our product, and again, we're interested, very much interested when we dig deeper. But 2 things that I think would help most of the new people is that napkin presentation that you did towards the end, the second slide before the last one, and that last one. Those 2 are, even though you're 10 years or you're 10 days in the business license agent, I think those will easily connect with our clients. So again, Rick, thanks a lot for this. Thank you for the overview of the company, and we look forward for more learning from you next Tuesday. Same time.
All right, guys. Thanks for having me. I appreciate it. We'll talk soon.
All right. Thank you.
Bye-bye.